Well, welcome, Big Canoe. It's 5 o'clock. Welcome to the board meeting. Bob, we're ready to go.
Thank you very much, Tim. Appreciate it. We'll get right on to the June 18th board meeting with the 2019 auditors report from our long-term auditor, Malden and Jenkins. And John Schultz, are you on and ready to rock and roll?
I am. Thank you, Bob.
It's all yours, John. Thank you.
All right. Just going to go ahead and share my screen. All right, we have two documents. As Bob mentioned, my name is John Schultz. I served as the assurance partner on the audit engagement. I specialize in our not-for-profit and association practice with the firm. I wanted to go through some of the highlights of the letter, which just for everybody, they might remember from previous audits, but this is what we refer to in the auditing world, the SAS 114 letter. It is the required communication to the governing body, which in case of the association would be the board of directors. Going over the letter, you'll see that we were engaged to perform a financial statement audit on the association for the year ending December 31st, 2019. As we will note in a minute, we did issue a unmodified audit opinion. For those who are not familiar with the auditing standards, that is the cleanest opinion an external auditor can give. And just to remember, I think we do mention this every year. The financial statements are the ownership and responsibility of management and the association. The only thing we are actually that is ours from Malden Jenkins is the audit opinion. We do assist the association and the finance team to prepare the financial statements. They actually provide us with all the supporting schedules and the groupings that actually we then take in and then drop it in the formal format that comes out to be your financial report. We did want to tell you a couple other things. We're very pleased to report there were no audit adjustments, nor were there any control deficiencies when we performed our audit procedures. We did provide what we refer to as a PBC list, or provided by client list, to Jane and her team before we came on site. Jane and her team worked very hard to get us everything we needed. They gave us full access to books and records to allow us to perform all of our procedures, which we did. We wanted to thank Jane and her team. That is a lot of work to get ready for the audit. Sometimes turns out to be actually worse than the actual audit. So we do appreciate her and her team for doing that. Then one thing we did want to mention, you'll see in the letter, there were two ASUs that were new for the association in the current year. They both were related to, and for those who don't know, ASU is an accounting standard update. Both of them were related to revenue recognition. Long story short, the association was really already abiding by them, so there was really no changes to the books. There was only a couple footnote disclosures in note 1 that were added, so nothing big there. And then really to summarize, the books are in very good condition. Again, we had no audit adjustments nor control deficiencies. It's something we really contribute, or really think it comes down to a couple of things. It's really good management. Jane and her team do a very good job. They've been open to recommendations over the years. For your size, it's a well-run finance and accounting function of the association. And then the other is actually this piece is you have very good governance through the finance committee role and the committee roles and the audit committee, as well as the board of directors. So with those combined, it really does result in a clean audit opinion and a good, clean financial report.
All right, John, if you want to share any documents, you could do that now. You haven't shown anything yet.
Oh, I'm sorry. I thought I had that. My apologies.
There you go.
Oh, no, I'm sorry. I clicked it and didn't click it again. So this is the letter I was just referring it. Like I mentioned, it is referred to as the SAS 114 letter, which is the required communication to the governing body of the audit results. And we kind of just went over that. I did some of the highlights. And the second thing I just quickly wanted to go over was actually some of the financial results. And we'll start on the audit opinion. And I already mentioned this. We did issue an unmodified audit opinion. Again, that's the cleanest report external auditor can issue. And then on the balance sheet, starting on page 3, we did want to point out a couple things. You'll see the total assets for the association at year end were a little over 44 million. We did want to point out 2 things, really comparing the audit report to your interim or monthly financial statements that Jane and her team prepare for the association. You'll see internally, they really track, the association has entered into some certificate for deposits, and under GAAP, depending on the maturity of those individual deposits, they can be presented as actually investments. So internally, the association really tracks the reserve funds as just cash, but for financial statement purposes, you'll see they're broken out between cash equivalents, and then investments in the current assets. If the maturity is within less than 12 months, and if it's over 12 months, you'll see there's investments in the non-current assets. And we did want to point out there is a footnote that kind of summarizes that if anybody was interested. It's actually note 4 on page 20, and that goes in detail of what makes up the reserve. And then the next thing the only other thing we wanted to point out, which is new this year, is the association made a decision to early adopt a new accounting standards update that is related to leases. The association did enter into a lease in 2019 for the new golf cart fleet. It was identified what is referred to in the accounting as an operating lease, and before the association early adopted the standard, the GAAP would not require and would not have the assets and liabilities actually on the balance sheet. It was only required to be in the commitment was only required to be disclosed in the footnotes. Well, now that actually changes, and it really aligns with how the association is really tracking the commitments for internal and monthly purposes, because it is a legal commitment that the association is required to pay for the lease, the monthly lease payments. And now you'll see it actually comes on the balance sheet as a right of use assets, and then a right of use or a lease liability. So that is a new thing. We just wanted to bring that to your attention. And the terms, if you're interested, it's all detailed out in note 8, which is on page 21 and 22. And then the statement of revenue and expenses, you'll see that total revenues for the year were a little over 18 million, 18,125,000. On the page 5, you'll see that your total expenses were 13 million for a positive return of 4,952,000, which was again a very good year, and that's really a reflection of really good governance of all the committees and the board. And that's a quick highlight. Is there any questions we might be able to answer?
Nothing, anyone? John, you did a great job. I appreciate it.
Thank you.
Let me turn it over to our chair of our Audit and Risk Committee. Jeff, you have any comments?
Yes, let me just say a few things. Boy, this Zoom is really great, isn't it? Everybody looks so young on Zoom. Nice feature. Thanks, John, and thanks to Malden and Jenkins and the POA staff. This was clearly an unusual year where an awful lot of things had to be done virtually with, no contact and the like, and no one was planning for that back when the planning stage was done. So this was kind of all done on the fly, and, thank God it all worked out well, and we here are successful on the date that we expected, and just due to a lot of hard work and creativity on everyone's part. As you're hopefully aware, the audit committee does not audit or bless the financial statements. We instead help ensure that the work done by the POA management is likely to result in accurately prepared financial reports. We also oversee the process of hiring and working with the external auditors to determine that they have the right environment to issue their opinion on the year-end financial statements. By the right environment, what I mean is that they are qualified, they're independent, and objective without bias or influence. We believe that our work and the several meetings we had with the auditors this year has accomplished that, and that you, the board, can rely on their opinion. As John mentioned, the golf cart leases are reflected on the balance sheet. This was originally thought to be mandatory under the accounting rules to effectively treat them as a purchase using the lease as a financing method. Instead, the leases were reflected on the balance sheet under the new rules that are in place that allow this treatment and would mandate that treatment in 2 more years. Instead, we early adopted, which meant that we won't have to revise the accounting for those leases again in the future. So we can be consistent from the start to the very finish. The other comment I wanted to make is in past years, and Jane should take great credit for this, but she probably won't. In past years, we had a number of adjustments that were made after the issuance of the prior year-end results in January. And we believe that led to some confusion and a delay in reporting the actual final results for the year. This year, the POA did things a little bit differently. In January, best estimates were made and recorded for these types of entries. This resulted in reporting that was far more complete and accurate at an earlier stage, and the reconciliation to the final audited numbers is essentially unnecessary as the difference was less than $200. So that concludes my report, and I'd be glad to answer any questions.
Any questions for Jeff?
Good news.
Okay, Jeff, thanks to you and your committee. Particularly thanks to Jane and her staff. A lot of people put a lot of work into this, but Jane, you were instrumental in once again getting a unmodified clean audit, and we appreciate it very much. Thank you. Last week, I had the privilege of introducing our new general manager at our work session. This week, I can introduce our experienced general manager. Scott, you got the admin report. Go right ahead.
Perfect. Thank you, Bob. I really appreciate it. First thing, I want to start with a little bit of good news. We are doing the very first property owner satisfaction survey in 3 years. It is long overdue, and it's one of the things that the Bobby Jones team built into the contract was that we would do it as soon as possible. Well, we're doing it as soon as possible. It's going to be next week. So basically, this will be coming out to every single email address that we have on record. In addition, Tim Moran had the smart idea. We're going to send out letters to those of you that we don't have emails for. And this would be a really, really good time to give us an email because your opinion is extremely important. So this will be, it's not hard. It's about 25 questions. It takes about 15 minutes. The written comments are equally as important, if not more so, compared to the ratings. And we will use it as a new baseline for our community since it's been 3 years. A lot has changed here in 3 years. So we will have a new baseline of our satisfaction, where we're doing well, where we're not doing well, what amenities do you really like, what needs to be improved, how's our governance doing, do you understand our financials, all of those kind of questions. And then we will be doing it again every year thereafter. So we'll be able to focus on the key areas we really need to improve, and then we'll be able to track our progress. So please, 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 please take 15 minutes and do it. It's a really important thing for the board and the staff to know where we need to focus. Second thing is not as much fun. It's really not as much fun. I love fireworks. I love fireworks at Big Canoe. It's my favorite holiday like ever here. It's so great. Last year on the lake, it was terrific. The governor's orders came out. The new executive order came out on Friday. Chief Ricky, Jason, myself, Robert, we all got together. We beat it up every way we could think of to beat it up. And we finally came to the conclusion that we could not conform to the governor's executive order and still do fireworks this year. any gathering more than 50 people, we are required to ensure social distancing. We're also required to provide all types of extra sanitation and cleaning and spaces where people could be isolated if they somehow tested with COVID that evening. Just so many things that we just felt we could not operationalize and guarantee safety. So we are postponing the fireworks. We're not canceling the fireworks, we're postponing the fireworks. Our biggest hope and desire is we can have a fantastic Labor Day celebration and move a number of the 4th of July events with Terry Sawyer over to Labor Day. If that doesn't work out for any reason, maybe we'll be passing out hot chocolate and ringing in the new year, but we're gonna do fireworks will fit somewhere in our lives because we love fireworks. So it was not an easy decision, honestly, but we err on the side of conforming with what the state of Georgia tells us to do. So that is what we did. On next topic is, I think I mentioned last week, one of the first things we were going to do was to reforecast the balance of year financially. So much has changed since the Finance Committee did the budget last November. And we took a look at it with key members of my staff, key members of Amy's Finance Committee. And we realized right away there were a couple key capital projects that were not going to happen this year that were originally planned. One of them was a fair amount of road paving. Unfortunately, the electric company and the water company just love to continue to ruin our asphalt. So we said, what was the point in spending a whole lot of good property owner money this year and then just having those certain roads torn up again? So we're having to defer that until the 2021 budget. The other key thing was redoing the swim dock. That is really tied in. We have to drain the lake when we do that over Lake Disharoon. That ties in with the golf course renovation, ties in with EPA approval for both of those projects. Since the Golf Course Creek 9 renovation is later now than we originally had hoped, we've deferred that as well until we can tie it in with the golf course. So both of those things generated some free cash that we had not planned on. So we were looking at two choices. We could either let that cash flow to the bottom line and use it then at the end of the year to move into our board designated capital fund, or we could choose to invest it back into our community and invest it now. And so my preference, and the board agreed and the Finance Committee agreed, is use the money, the extra cash that was generated, to take care of, there's so many things that have been deferred for one reason or another. There's buildings with siding peeling off. There's paint that needs to happen. There's gutters that leak. There's dead trees. There's irrigation systems that don't work. We don't look our best. We really don't. You know, we're Big Canoe. We're better than that, seriously. So, you know, we have 4 or 5 good months of weather ahead of us, God willing. And so we're gonna get real busy really fast. And you'll see lots of ants crawling all over buildings and things because those are the painters. And you'll see pine straw coming back in the public areas, and you'll see fall plantings coming back, and you'll see the place looking a little bit spiffier and fresher and brighter and a little more something to be proud of. So that is the direction we're taking with the forecast. Jane and Amy will talk a lot more about it as we go through, but I just wanted to give you kind of the rationale for how we were thinking about it strategically. Jane, if you're there, you can throw up my slide for me on food and beverage. If you can share your screen. Drum roll. There we go, perfect. Nobody asked me to do this, but I wanted to do this because as a property owner, food and beverage is something I worry about a whole lot. And as GM, food and beverage is something I worry about a whole lot. So I wanted to show this to everybody. These numbers will play into our new forecast that Jane will go through shortly. So food and beverage gets kind of confusing. Whoops, there we go. Because there is obviously cost of sales, which is the cost of actually making the hamburger. There is fixed costs of chefs and sous chefs and line cooks. There is variable cost of the people that we put on the floor every night at front of house to greet you and to serve you. And then there's supplies, which are napkins and glassware and linens and things of that nature. So I wanted to simplify things, and I said, how do I look at this in a way that kind of rolls it all up? And this is how I chose to do that. So let me explain to you. In 2019, you see sales revenue of $2.154 million. That's what we did across all of our food and beverage operations. How do you lose $779,564 on that amount of revenue? The way you do that is basically for every dollar that you earned in revenue, we lost $1.36. So if you do the math, you lose all of that 2.154 million, and you lose an additional 36 cents on every dollar, which comes out to a net income of minus 779. So then you'd say, well, how are we doing so far this year? And January through May, and I'll rewind a little bit. January, you might remember we were closed because the kitchen renovations took a little longer than expected. February is not a big month here. We had tons of rain anyway. March, this horrible thing called COVID happened, and we turned ourselves into a takeout restaurant like most of America did with their restaurants. And on top of that, we elected to do the right thing by our employees and pay all of our full-time people for a month and all of our half-time people or part-time people for half a month. So we lost on $312,000 of revenue, we lost $362,000, which basically means on every dollar of revenue, we lost $2.16. So that is obviously not sustainable, but we still had all of the fixed costs to do takeout. You still have a chef, you still have some line cooks, you still have one person running things in and out, and you don't have enough revenue to really cover what become very quickly your fixed costs. That's why on the news, you see all the restaurants and the people saying, you know, back, if you remember a month or two ago, they were like, we're turning into a takeout restaurant, but we can't live that way. A restaurant can't make enough money just doing takeout. You know, you don't have much alcohol sales, you don't have any banquets, you don't have any catering kind of events going on, and you don't have any in-house dining. So that is why we lost $362,000 on $312,000 of revenue. If you look forward to June through December and you look at the forecast that Amy and Jane will be showing, we are back for the balance of the year. We think that we will generate $1 million for the balance of the year in additional sales revenue, and we will lose $359,000 on that. And that comes out to $1.34. So basically on every dollar of revenue, we lose $1.34. I really look at that honestly as worst case. We are going to, now that the Bobby Jones contract has been signed and we're starting to operationalize all of their training and all of their food and beverage management systems, I believe that we can do better than the $1.34 on every dollar of revenue. So we kind of look at that as the worst it should be, and we're going to do everything we can to make sure we can grow the revenue without a proportional growth in labor. To give you an example, if we increase the revenue by 10% and we increase the labor cost by 10%, you're basically right at the same point. You're losing $1.34 on every dollar you make. You're no better off. So the only way we get better is to increase the revenue by like 20% and increase your labor costs by like 4 or 5%. That then turns into a happy equation and everybody's in a lot better shape. That's what we're going to try to do. Remember, we don't have a lot of catering. We don't have a lot of banquets happening in like July and August. Those are all really high margin things. A lot of those have moved into 2021 or into the fall. So that is certainly a bit more challenging in helping our margin than we would normally have had in our original estimate. The last line shows something that when Gautam from Bobby Jones Links got here in January, he did a presentation for the board and he said, remember, COVID hadn't happened yet. He said, we believe, Bobby Jones, looking at our operation, looking at what we normally do here, we believe you should be able to earn about $2.4 million of revenue using all the wonderful assets of Big
Join the meeting.
And we believe that normally at all of our other operations, we can get down to a cost per sales dollar of about $1.16. So that would have said we would have lost about $391,000 on 2.4. And that would be a huge improvement over where we were last year. And we'd all be pretty happy with that in 2020. So our goal, my goal, Robert's goal, the chef's goal is to try to get that $1.34 back closer to the $1.16 that GoTom originally laid out. And that's what we're going to be working to over the next couple of months. But I just wanted to give you guys kind of a picture of how I'm looking at the business and what we're going to try to manage to. You can't stay at $1.34 loss for every dollar you make and be happy with the result. So, and on the other hand, it's it's 18 cents. So it's not like we need to cut our labor in half or anything like that. We just need to improve. We need to grow our top line without, proportionally growing our costs. And I think we got some ways to do that. So that's just kind of an update because I know food and beverage is really important to all of us. And with that, I'll turn it over to Jane and let her go through the May results and the balance of year forecast. Jane.
Amy, do you want to?
Yes, I'm going to go.
Amy,
Jane's going to put up some slides.
Okay.
But first of all, congratulations, Big Canoe, on hiring Scott to be our GM. I don't know how we could have hired a more qualified candidate, and he'll be missed on finance, but our loss is definitely Big Canoe's gain. The committee met in regular session earlier this week to review the May financials and the forecast for the remainder of the year. Jane's going to go through some more of those details. Just a few words about the process. Some members of the committee met last week with finance, and 3 other members of management reviewed in a fair amount of detail what we expect the rest of the year to look like. We worked through a lot of assumptions and spreadsheets to get to the end product. And with the transition to the new management arrangement, we think this is a good time to move forward with freshening up facilities. As Scott said, if we want to be the preeminent mountain community, we need to look like one. To that end, we recommended a number of changes to both operational and capital forecasts. Scott's already alluded to that. We were satisfied with the forecast being presented and voted unanimously to recommend to the board for approval. To the screen, Jane's going to point out, as I just mentioned, a couple things. At the end of May, our overall cash was up slightly from the previous month. Our operating cash has increased to a little over 2.6 million. That represents about 1 month's expenses, which presently include the routine capital replacement costs, 1-year debt service, and the yet to be transferred cumulative operating surplus cash. This correlates to the cash ratio at the bottom of the slide, which is a more than healthy 1.07. The board designated cash capital fund continues to grow. It stands at close to 1.5 million. We're still well positioned to be able to fund near-term projects on the master plan, including the Creek 9 initiative, from cash on hand. The restricted cash, capital reserve, commonly thought of as the emergency fund for roads, bridges, and dams, also continues to slowly grow and is slightly more than 2.8 million. This is more restricted than board designated in that it was created by an amendment to the covenants and must be replenished within 3 years of use. Lastly, our debt equity ratio at the bottom is a very strong 0.23 and has declined slightly, driven primarily by the payment on the long-term debt. Next slide, Jane. Now that the audit has concluded, the Finance Committee is formally recommending the transfer of the $250,000 from operating cash to the board designated cash that was pending from our January recommendation. Couple other quick items, and then I'll get on to the other 2 recommendations. Personnel performing the required capital reserve study will be on site sometime between July 20th and August 3rd, and we should have the report 30 to 45 days later. This will form a good roadmap for our routine replacement projects. and interviews to fill the 3 positions on the Finance Committee, 2 next year and 1 to backfill for Scott, will take place next week, and we hope to have our recommendations ready for the board in July. Okay, the last point on the slide, in addition to the recommending the operational and capital forecast be approved and the $250,000 transfer be approved, we have a third one for the board to consider today or at a future meeting. For some time, we've thought the process of combining operational expenses with routine capital expenditures in both presentation and physical cash is not best practice. Having voted unanimously, we recommend starting July 1, all capital expenditures, both routine and master, should be paid from board designated cash. In other words, capital projects should be paid from the capital fund, operating expenses should be paid from operating cash. This would fall under the provisions for approval and reconciliation specified in a couple of our policies and procedures, 153 and 105.2, and we'll need to make a few minor mods on 105.2 for this new classification. Each month, an amount equal to monthly depreciation would be transferred from operating cash to board designated cash capital, in addition to the other existing source of funds for that account. The benefits would be, it removes ability for capital budget dollars to be used for operational purposes without full transparency. It provides a truer picture of how much capital is really required to preserve our common properties. And it simplifies the cash flow projections for future needed capital requirements and operational decisions once the change is fully digested. That concludes my report. If anyone has questions.
Okay, Jane, are you ready for your financial report now?
Want me to take this to fire?
Hey, Bob, while we're waiting here, I
Yeah,
have a-
go ahead. Go ahead,
I have
Regis.
a couple of questions for Scott, and there's certainly some overlap with Amy. Scott, you mentioned we started talking about this last week, but we were interrupted, so I never did get your answer. The
Okay.
capital projects, you talked about that we are deferring a number of them.
Mhm.
For example, road paving. Now, those projects are going to be deferred, not canceled. So instead of, let's say road paving this year was $500,000, it's going to be $500,000 next year.
Yeah.
We would expect to pay $1 million for road paving. So we're not creating any cash. We're just deferring it. And yet you have suggested we should take that cash that is not being spent on the capital and use it for operating expenses to, spruce up the place.
Mhm.
And Lord knows I have no problem with that. I think, something we've talked about too. We certainly, in a lot of areas, we don't look preeminent at all. We don't even look eminent, let alone preeminent. But in any event, the issue is we are deferring, not canceling these capital projects. We're going to have to pay for them someday. Is it prudent to take all this money now and spend it when we're going to have to come up with this to pay those projects when we do them next year?
Yeah, we, anything that was in the capital budget for 2021 that we could bring back into 2020, we did. So basically, two projects moved out, and two smaller projects moved forward. So we tried to do that as well. So we weren't just taking all that cash and shoving it into the future. For example, we have 2 bridges over in the Wildcat area that all have wooden planks on them, and they were to be, they're starting to fall into disrepair, and they're under capital. And so basically we decided to do them this year instead. We also had a roofing project for the chimneys, about 20 grand on that. And that was going to be in 2021. And although we can't get inside the chimneys right now because it's still owned, you know, running with talk of the town, we can do the roof. So basically we brought the roof back. So we did do some horse trading back and forth. So we didn't just move all of that money. And, you know, the issue with roads, I think we have to take a real close look at roads when we go into the 2021 budget, because it seems like we always have a really big number. And then at least the 2 years I've been here, we always had sort of the same discussion, which is, well, we can't really do those roads because they're still torn up or things like that. So I'm not sure that we would just normally, you know, take 600 and add it to what's normally in there for 600 and now say we need 1.2. So, you know, we are starting right now the capital estimates, believe it or not, for 2021. That project is underway already. So we'll be looking real closely to see if we can offset some of that money that we move forward. But we did move at least 3 projects earlier as well.
Well, you kind of answered the question, but yet again, you didn't. I mean, the simple question is we're deferring capital monies. But, you know, maybe roads is not a good example, draining Lake Disharoon.
Right.
We're going to take, you know, I'm not sure how much that costs, let's say $250,000.
Mhm.
We're going to take that, we're going to defer that into next year. We're not going to do it this year, but we're going to take that $250,000 and use it on projects like painting the clubhouse and the cart barn and things like that. Where is that? So we're going to spend some or all of that money.
Right.
Where is that money going to come from when we need the $250,000 to spend to drain lake or dredge Lake Disharoon?
Yeah, well, my obviously, which is why I put the food and beverage slide up there, obviously one of our big drains on our, you know, on our operational cash has been food and beverage. So if we go from a $700,000 loss, which is where we have been running under the new Bobby Jones contract and agreement and all of their assets and training and procedures, the cash generated next year out of operations, you know, we'll start to build surplus cash. So right now the plan was, you know, as Amy just said, we will take an amount equal to the depreciation and start moving it, you know, to fund capital next year. As we go through each quarter, my belief will be that we are also starting to throw off surplus cash due to fixing our biggest operational drain. And we would then be moving more money, not just the depreciation, be moving that into the capital budget to allow us to fund some of those projects as well. So bottom line, you know, we need to make operations throw off a bit more cash so that we can cover anything that we're moving forward, you know, into next year. That's what I'd be looking to do.
Okay, well,
Also, can I
Go
add
ahead.
one thing, Regis?
sure.
Also, some of the maintenance things that got accelerated would have happened next year. And now they won't happen next year, but some of the capital stuff will.
Okay, now that makes a lot of sense. And I think both of you are aware of the concern, and we just need to be cautious in spending all this, you know, money that now it appears we have, but
Right.
you know, that may not be the case.
Yeah.
The other question, if I may, and since you mentioned the clubhouse again, the $1.34, do you have a breakdown of that by component? I would think most of that, you know, the fixed overhead labor, the variable labor and the food cost of sales. I would think most of that $1.34, which is higher than we had planned, or the $1.16 is being driven by the fixed labor cost. Is that true, or are we also experiencing higher cost in the variable and the food cost of sales?
Yeah, so our cost of sales looks really actually pretty good. So we're running about 36%, which is pretty standard for any good food and beverage operation. Our materials cost a little bit high, but not bad. Our labor cost is where the problem is, and it's really not fixed. So, the issue we have to watch really, really carefully is in the past, as revenue has gone up, the way that problem has been, the additional service demands, if you will, have been solved, is just throwing more variable cost at it or throwing more overtime at it. So not scheduling very efficiently, not scheduling ahead perhaps like we should be, not watching very carefully, through good training, a server should be able to handle more tables than perhaps they were handling before. So I actually worry more about the variable cost of labor and I think that's where we will move from the 134 towards the 116. That's where we really need to focus.
Okay, thank you.
You bet.
Jane, are you on? I think you were muted.
I am.
There you go.
I am.
Okay.
My cell phone dropped the call in the middle of Scott's speech, so it was not good. Okay. My May net income was $167,000. This was $158,000 more than was forecasted last month. The operation expenses were less than forecast by $11,000, and I am doing this by forecast and not the budget, so y'all remember that. The amenities were better than the forecast by $78,000. All of the amenities revenues exceeded their what I had forecasted. And you can tell the golf operations was much better than what I did, as was the marina and the clubhouse in addition. Cost of sales were $29,000 more than forecast, but this would have been the higher sales in the clubhouse and in the golf operations. Payroll expenses were actually less than what I forecasted, and it was mostly at the clubhouse. The amenity operating expenses were $51,000 more than we were over forecast. And this was really the golf cart operations. That was January through May adjustment of making that cart lease as an operating lease. And when you look at it, you'll see that the difference really is in the depreciation, and that's less by $53,500. So that's where you're going to be seeing those differences in the financials for the rest of the year. So that is where the financials were. Our property sales in the month of May, through the month of May, were 118. That's one more than was actually in the admin report. We got a May closing this week, so I went ahead and reported it on this slide. And that's 103 homes. It's almost exactly the same as it was May last year, through May last year. The average home price rose from last month up to $426,600. So there is still some big changes here in what's being sold throughout Big Canoe and what's available for sale and in Big Canoe. And this is just the numbers that Scott was talking about of where we are for using the operating expenses. The operating expenses did go up, which made the net income go down by about $600. So that brings this number, that net loss, and that will show you the net loss, the less capital expenditures. So that gives us the surplus operating cash right about where we were last month when I did the forecasted budget. Does anybody have any questions?
Jane, how many homes do we show currently under construction?
We currently show about 20 homes under construction.
Okay. And that's a pretty big.
No,
number.
Trina has some more coming up. So she was talking about that the other day. So
Okay. Very good. Thanks.
Okay, no other questions. I'd like to make a comment on the food and beverage loss of $700,000 again in 2020 is obviously unacceptable and unsustainable to Big Canoe. However, it's understandable in the environment that we were in the COVID environment. We've lost $1 million in revenue. A lot of that revenue was banquet revenue, which was very profitable. And I'd like to commend the property owners and the employees of handling this unprecedented event and coming out as well as we are coming out. We will still, according to the forecast, we will still be net cash positive, and we will still be generating almost $600,000 in net income. So you saw the audit, we're not hurting financially, but it was a very unfortunate thing, and we expect the food and beverage loss to turn around as we get rid of COVID and in 2021 particularly. A couple of comments on what Scott said. Customer satisfaction survey, we did that back in my first term on the board, and we viewed that as a very, very important feedback mechanism. So as Scott was appealing, please respond to that, good, bad, indifferent, however you feel about it. We, the board, are going to take action on the results of that survey. The 4th of July, very unfortunate. We would all like to have fireworks on the 4th of July. We delayed the decision, Scott's decision, as much as possible to get the latest executive order from the governor, and it just did not allow it to happen. So the board, this was an operational decision. The board supports it 100%. With that, I will turn it over to Phil. Phil, our developer appointed representative on the board, is going to talk about the sales in the market in Big Canoe. All yours, Phil.
Thanks, Bob. Bob asked me to give you an update on where we are in the marketplace right now and what the trends are looking like. Last month, we had 123 homes listed according to First Multiple List, which all the agencies here use. We're down to 104 homes, so a drop from 123 to 104 listed. Last month, we had 3 condos in that number. This month, we only have 1 condo for sale. So homes are selling well. They're starting at $134,900 for the least expensive listing, up to $1,499,000 for the most expensive current listing in the market. 131 lots sold. Are listed for sale. I wish they'd sold. That would have been great. They list anywhere from $4,500 up to a maximum of $399,900 for the most expensive lot. Those are usually lake properties. 27 homes under contract right now, according to First Multiple List. 107 homes closed in the last 6 months, again, according to their statistics, and 233 homes have closed in the last 1 year. Again, these are all First Multi-List numbers, which we all report to. 12 lots closed in the last 6 months. 29 lots have closed in the last 1 year. And again, as you recall, Jane, the number I asked her about 20 homes are under construction right now in various stages. And you're seeing a lot of construction going on in Big Canoe right now. That's kind of a norm, about 20 homes at a time in Big Canoe. Been as high as 30 in the previous years. The market is strong. We've got good activity. We need more homes listed to sell. It's a healthy market. Got a lot of activity. a good rule of thumb for Big Canoe is about 10% turnover. We have around 2,800 homes in the community that's built. Of those, about 10% per year will turn over around 280 homes or so. Spring is the best time. It's a good market, strong activity. And as Jane said, the average price for last month was $426,000. So activity's good. A lot of people coming and visiting, doing the discovery package and other programs. And with good weather and more listings, I think we'll continue to see a healthy market.
Thank you, Phil. Appreciate it. Comments, questions to Phil? Market is strong. We can all be happy with that. Big Canoe.
Prices are up,
attractive
about
place.
5% increase in the past year. So we've had some homes that have actually sold for full price in just days. So those are great locations with nice view, and there's not many of those, and they go quickly.
Okay, thanks again, Phil. Amy, let me backtrack to your presentation. I think we need a couple of motions. The forecast, we need to vote to accept, need a motion on acceptance of the forecast. First of all, before I ask for that motion, I'd like to thank all of those that worked very hard, very diligently to give us this new forecast. So we understand now here in June, in the midst of all the chaos of COVID-19, we've got an understanding of very good understanding of what our finances are for the rest of the year. So thanks to Jane and her team. Thanks to Scott, put in about 3 months of work in his first week on the job, and Amy and your team and anybody else associated with that work. So is there a motion to accept that forecast, the forecast, capital and operating forecast for 2020?
Bob, I make the motion, we accept it.
Thank you. Second, all in favor, say aye.
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 Opposed? It's unanimous. Thank you. I think we need another, you're making a recommendation to transfer $250,000 in the board designated fund.
Yes, that was pending from our January recommendation, pending the conclusion of the audit.
Yes, and the audit is complete. Recommendation is here. Is there a motion to transfer $250,000 operating to the board designated capital fund?
Bob, I make the recommendation that we do that.
Thank you.
Second.
All in favor, say aye. Aye.
Aye.
Opposed? I'm assuming there's no discussion on this. Sorry about that. One other thing, you had a third thing, and that was some, the procedures need updating, and I assume that you're going to bring those to the board next month. Is that right?
Yes, the one of the policies and procedures will need to be updated, but how it gets updated may ride on the third recommendation and whether it's approved or not. That will determine how we have to update the policy.
Okay, so do you need something from us now?
Well, you can do it now or you can do it next month. The recommendation was to start the process change July 1 because that's a clean cutoff for half the year. But
In favor of that.
Lou, you moved?
I do.
Yes,
I second.
Can we have some, can we have some discussion on that?
Yeah, please.
Yeah, I'm not philosophically opposed to that, but Amy, is there any downside to doing this? Just in the little bit of, time that I've had to cogitate over this, I really don't see anything, I don't see a downside. And I do see some of the advantages you pointed to, but am I missing something? Is there something we ought to consider that?
I know, I've thought about it too. A lot of people have thought about it, Regis. It's still the same cash. There's no more, no less. We just would like for all capital to be paid from capital as opposed to paid from operating cash. To some extent, you could look at it as just simple formatting is different. But I think once we do it and digest it, it's going to make forecasting easier than what we've been doing, because we're not commingling the physical funds in a nefarious way. But if we could just have two clean budgets and funding of the budgets, which is what we don't have. Big Canoe in general has such an unusual model because we fund all capital from operating, from a high net income.
Right, right.
If that was designated, in other words, if that came in as an upfront capital contribution, then you wouldn't have to have such a high P&L to fund your capital. So this is just another expression of how P&L, maintenance expenses, should be paid from one account and capital should be paid from another account.
So if I understand it, in the future, the approval to move 250,000 from operating to capital is no longer going to be required. That's going to be done more or less automatically.
More or less, but at the end of the year, it is entirely possible. If you remember the slide that Jane had there, I think there was like 100 and, I don't know, 60, 70 something surplus operating cash. Not a ton of money, but some money.
Okay.
And
Yep.
there's still the option to do that.
Okay. Very good then.
Okay, any other questions before I call the vote? Oh, hearing none, all in favor say aye. Aye.
Aye.
Opposed? None, unanimous. Thank you, Amy, once
Okay.
again.
Okay, we'll work on the policy and get it updated.
Okay, and next we are on to the architectural control standards. We've had 2 readings. I believe we are ready for a vote now. Debbie, correct me if I'm wrong.
You're correct.
Thank you. Is there a motion to accept the changes in the architectural control standards?
I make the motion.
I second.
Any discussion?
We've discussed this quite a bit already.
Yes, we have. All in favor, say aye. Aye.
Aye.
Opposed? And that also is unanimous. Next is the rules and regulations. This is the second reading for the rules and regulations. Jason, are you going to do the honors, or is Jane going to step in here?
Sorry about that. Apparently I was muted. It might be a combination of both. I would like to start off by just following up with the summary. Not much has changed for the most part. Section A5, which was the amenity and automated gate restrictions, that draft of Jane got the legal opinion, and we are bound by the 30 days, not 60 days. So that was changed. Tim changed that in the draft and should be updated on the website as of yesterday. So that basically all delinquencies 30 days or more are subject to those restrictions within the rules and regulations and the bylaws. So that change has been made. Other than that, there's been no change with the summary or the draft as it was presented at the first reading.
Okay, so I understand we are consistent. The rules and regulations and the bylaws are now consistent at 30 days loss of voting and amenity privilege. Is that right?
Yes, sir. That's correct.
Okay. Any other questions, comments?
I'd just like to make a comment. I'd like to thank the property owner who brought that, Patricia Cross, who brought that discrepancy to our attention. And I think it just goes to show that we really need to, this initiative we've talked about in terms of cleaning up our governance documents really needs to be prioritized.
I agree.
Yes, and we had more than the last board had more than enough discussion on the discrepancies, the inconsistencies. And Patricia was instrumental last year, and I appreciate also very much that she did what she did this year. Thank you, and I hope we took the action that you were expecting. So that's the second reading. We'll have a vote on that next month in July. And Debbie or Jane, we got a check signature resolution. Who has got that one?
Jane does.
Okay, what do you need here, Jane?
Okay, there we are. I got unmuted. So the check resolution is to add Scott onto the resolution. It adds him into the up in the area where he can help open accounts and along with myself and the 4 officers, and it also adds him as a check signer onto the accounts.
That sounds pretty high risk. I don't know.
This is at the bank that we do business with, correct?
It's the bank that we do business. It's the banks,
It's
plural,
and,
that we do business with.
and the other banks, right? Okay.
Right.
Okay, so do I hear a motion
I move to approve.
and a second?
Second.
Any discussion? All in favor, say aye. Aye. Opposed? Unanimous. Next to last is Regis. You have an update for us on the Creek 9 renovation?
Right. Rejuvenation, we're calling it, the Creek 9 rejuvenation.
Rejuvenation, okay.
Right. And this is something we really haven't talked about a lot, given everything that's going on with the COVID virus, the Bobby Jones contract, the hiring of the new general manager. But just because it's kind of fallen off the radar screen doesn't mean we still don't have a problem to deal with. And that problem is that even though our golf course is gorgeous, I mean, I've never seen it in as good a condition, we still do have a serious problem with the infrastructure on the signature 9 holes, the Creek 9. And even though it has been on the back burner, we have had a group of 8 property owners, myself included. Amy is a part of that group. And we have called ourselves the Creek 9 Initiative. It's our group, and that's also what we have titled this campaign. And it's not really a sales campaign, but it is more of an informational campaign. We are trying to develop the facts and data to provide to the property owners so they can make a knowledgeable decision on this when it comes to a vote. So as I said, we have been working very hard on this. We've got 3 of the staff members, BJ, Lydell, and Robert, that have been helping us. And where things stand now as far as the timing of the vote, this is my recommendation, and the board has not heard this previously, but I would like to have this vote. I shouldn't say it's our team is thinking that we would like to have this vote in September, which would be sufficient time to allow this project to take place in a orderly fashion, beginning with in spring of next year. So anyone with any project management experience will know and understands that the worst thing you want to do is compressing a schedule at the start. So we really need to get this thing underway in September. We would like to go ahead in September to give adequate times for permitting, for drawings, for everything, all the planning that needs to be done before you actually start turning over dirt. So given that September date, and then, again, it's a suggestion, the board is going to have to approve this. What we would propose to do is begin our informational campaign sometime in the August timeframe. So we'd start in August, have a vote sometime in mid-September, 4 to 6 weeks for this. And who knows what this campaign is going to look like. It certainly doesn't look like we're going to be having any community coffees or meetings in the chapel, but we will find ways to get the message out. And that's pretty much it. I would like the rest of the board to consider that timing on things. There will not be that much of an overlap with the board campaign. We'd like to kind of get this out of the way before the campaign for the 2 open board seats, so that August to September timeframe works well for that as well. Any questions, comments, concerns?
This schedule sounds reasonable. I'm glad you're starting, the information and drawing the attention to it.
Andy, how does it jive with the CCF? Have you given any thought to a target date for that vote yet?
No, not with the additional information from this week, which is the board taking the reins here briefly for helping prioritize along with the other related committees, because we have money set aside for Creek, or will by January 1st. We know that's, hopefully a very near-term project.
Okay. Anybody else? Any comments, questions? All right. Thank you, Reed. Appreciate it. Candy, I think you have at least one property owner question that we're going to do before we adjourn this.
Yes, that came from, this came from Andrew Crane, and he had some suggestions around maybe installing lockers in the post office for Amazon delivery vans. And he provided some suggestions for maybe even how to obtain these lockers at a reasonable cost. Wayne was a little bit involved in this last year, or a lot involved in this last year, and I think he was going to provide a summary response.
So let me give you a short answer on the request. First of all, we haven't ruled out doing it. When we started looking at the post office, we looked at both space. I think everyone knows we were flooded with packages at Christmas. That really was the tight window. We looked at what would package to kind of refurbish the receiving part of the post office, along with all of the safety parking around it. At that time, in coordination with the post office personnel, the feeling was that they could manage what they were doing right now. We would continue, which we are doing right now, upgrading the parking lot. Now, I think the locker situation is still very much under consideration. As a matter of fact, I just got a call from one of the senior vice president of FedEx while we were on this call to just clarify a couple of points. What communities are doing is you don't need a locker for everyone. You need an assortment of different size lockers, all of which are electronically stashed with whatever's in it, and you get an email with the code and you go pick it up. That does require security. It does require some other considerations. I think the answer is we appreciate your comment. We haven't ruled it out. This is something we will talk with the Long Range Planning Committee on. But very much this is in transition because of all the technology changes. Just as an aside, FedEx is delivering a lot of things directly to Walmart in a contract with them. UPS has lockers where lots of things are being delivered to them. They have to get it. And then Amazon is in the process of really securing their aviation fleet. Right now, they're using Atlas in order to be able to particularly meet rural requirements. So it may not be that it will be immediately a priority, but it'll certainly be something we look at. There are some restrictions that deal with things like liquor and ammunition that are delivered. They have to be signed for. So beyond that, I'll give you a second response to your request, just so you know it. But it's a great suggestion. It's just a question now of how do we prioritize it and where would we put it? You mentioned the North Gate in your letter. Certainly the Long Range Planning Committee has been looking at the North Gate for a number of things. I don't think it would be a standalone. I think it would be part of some other initiatives. So Candace, I hope that will help clarify where we are on it.
Thank you.
That's it, Candy?
Yes. We had probably another 12 Ask the Board questions this month. They were all related to opening hours and for the various facilities. And those have all been responded to either directly through e-blast that came out within probably 24 hours after the questions came.
Scott, what's the latest thinking on opening hours?
We are going back to normal hours in the dining room starting on Sunday.
Thank you.
You're welcome.
Hey, Scott, does that require reservations?
They're always suggested because you know, we're still trying to spread tables a little bit farther, but in general, I think it's pretty much back to normal at this point. You know, we'll have far more capacity for walk-ups than we had before. So,
Scott, are we going to stay open on Mondays?
we are right now, yeah.
Gonna be open?
Yep. And I would also tell everybody, I mean, the experience, if you haven't been there for a while, the dining experience is so much nicer than it was. Chef Albert and company, the food is delicious. The presentation is fantastic. The desserts are so yummy. I mean, come give it a try, because as you saw in that wonderful chart before, it's about driving the revenue up, and we'll work hard to maintain the cost. But come back and give it a try, because it's pretty darn nice.
And curbside will be retained?
Yeah, we're still keeping that for the foreseeable future. We'll watch what the volume is on that, but it's still such a nice benefit for people that are just still, you know, not able or not willing to go and sit at a dining table yet. We'll still maintain that.
Scott, what is the opening time for lunch? Is it? I'd heard 12, but 12 is a bit late for those coming from the chapel or any of the local churches, because they get out generally around 11:30, and it would be nice if they could come in right after, go from one right into the other. So that's the only thought and suggestion that I shared, was just to try to coincide with leaving church and going right to the clubhouse and not having to go home and wait 30 minutes.
Yep. Robert was looking into that today. I'll let him respond. We were trying to move it a little earlier.
Okay. Thank you.
Go ahead, Robert.
Yeah. So starting Sunday, the opening hours will be 11 o'clock and the closing hours will be 9 o'clock.
Very good.
Yep.
Thank you. That's
Pretty
great.
much back to normal operating hours.
Wonderful.
And still opening on Mondays.
The
Yep.
community will love that. That's awesome.
Yeah. We have been really busy, and the other thing I didn't mention is we are rolling out the Bobby Jones training program for all employees next week. So some folks got it before, back in January, but it's been a while. And so it's kind of a refresher for them. So again, between the, I think a little higher level of service and the fabulous food, come on back and try it. It's different than it was a year ago. Way different.
Thanks, Scott. Anything else?
Yeah, I'd like to ask Scott, you mentioned that the tables are going to be a little bit farther apart. Are we relieved of the social distancing requirements that were in the last government's order?
You know, we actually are. I mean, the governor took a pretty liberal stand, and, you know, removed most of the number restrictions. You recall before we were doing, you know, 10 diners per 300 square feet. You know, all of those things are gone. There is no maximum size now to the tables. All of that's gone. The issue now is kind of when you get into large events like fireworks. So, you know, we're being prudent, but you shouldn't really have trouble finding a table.
Thank
Okay,
you.
anything else?
Yeah. Scott, can I just jump in there with that?
Yeah, please go.
So everything we're doing as far as the restaurant and groups coming out and all these organized groups, we are still recommending the 6 feet of separation or the 6 feet of distancing to comply with the executive order. So that's the biggest thing we're doing. So we're starting to open up for groups and so forth and so on. So again, we're working within the biggest thing we're doing is if they can separate by 6 feet, we'll be able to do it.
Okay, anything else? Let me make one brief comment. We had a day-long planning session with Bobby Jones Links last Friday. There will be a extensive note going on about the contents of that meeting, but essentially it was to talk about our Big Canoe's vision, values, priorities, roles and responsibilities of our Bobby Jones Links and ourselves, and some specific measurements to define success of the agreement. With that, I'll entertain a motion for adjournment. And after the adjournment, we'll answer any questions that anybody else that is watching this has come forward with. Is there a motion?
I make a
So
motion,
moved.
Bob.
Second?
Second.
All in favor, say aye.
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 Opposed? No. Okay, Tim, what do you have for us?
All right, thank you, Bob. We have 10 questions. Bob Hornsby, lot 5128, asked, did the club apply for and receive PPP? I guess personal protective.
Yeah, I could take that. The short answer is we did apply and we were turned down as a 501c4. We were not eligible. However, we do believe we're going to get some tax credits from the CARES Act through what we did with our paying our full-time employees and part-time employees and things like that. So we will be receiving some money back through that, but we couldn't get the PPP.
Okay, thanks, Scott. Anything else, Tim?
Holly Lundberg from 2637 asked, will you extend operating hours at the pub, Duffers, and Clubhouse so we can spend more on food?
I'll answer that, yes.
Yes.
All right, next question. Trish McCarthy, lot 220, asks, I live in the Tree Toppers and the signage is bad. The old 100 section is Treetop Knoll Circle and the old 200 section is Treetop Knoll Drive. This makes it very confusing for deliveries. Is a fixed plan for this signage?
I will tell you, I was over at the sign shop today with Jacob, and one of the things about my Spruce Up Big Canoe campaign is we are looking at all signage, and you know, where there is stuff that is decrepit or out of date or confusing, we will do our best to replace that at the same time. So you just added something to my list, so thank you.
Sandy Lipkowitz, lot 22221. With an increase in social unrest sweeping our country, some of it in close proximity to Big Canoe, I request the board revisit the manning of the North Gate to 24 hours a day.
Scott, have you considered that at all in your?
Now, I mean, if the board would like us to take a look at that and you know, get back to you with a few recommendations, we'd be happy to do that.
I think that's the right answer.
Yes, I would rather look for a recommendation than make a
Yep.
decision here.
Okay.
We'll look for that when you, thank you much.
Okay.
Hey, more?
Yes, Holly again, 2637. What is the plan for chimneys once talk of the town lease is up? As the closest next door neighbor, noise levels for outdoor events are often very disturbing. We ask talk of the town be held to the same standards as every other property owner.
I'll take most of that. Wayne, you can jump in.
I
as
will
well.
certainly jump in on it as the sound control for that location.
Yep. Okay. So the very first thing is Robert and Jason are looking currently at what renovations are necessary. We definitely need to make the bathrooms ADA compliant. We've learned that Talk of the Town owns most of the inventory for, you know, whether it's cutlery or linens or tables or actually the stainless steel counters in the kitchen. However, they probably will give us a really good deal on that because they probably don't want to move it. So we're looking through all the things we need to do to put an estimate together for the 2021 capital budget of the things we need to do to that facility to make it, you know, worthy of a first class dining, wedding, corporate meeting type of venue. So that'll be part of the 2021 budget process. We are taking care of things like pressure washing and painting this year. As I mentioned before, we moved up the roof activity. That will be done this year. So we're, you know, getting the building in good shape. It's a fabulous venue. It's also a bit tired inside and on the outside, but I think we can really make it into a first-class facility. So, and again, the plan has always been that takes a fair amount of the burden off of the clubhouse for a number of the weddings. We actually have our first wedding planned for the Chimneys next April. So we need to get the building in shape by then. Wayne, do you want to add anything to that?
No, I think we have 14 weddings planned, or at least on the docket. So more work to be done on just our business plan and strategy, but it's a lot easier now that we actually have chefs and a team, so we can sit down and get real specific. And I think the noise point's well taken from earlier. I probably live as close as anyone to the Chimneys, and it's just one of those things we deal with through the year. So we have to get that under control a bit.
Scott, if I could ask kind of a follow-up question.
Sure.
You said the renovation of that building is in the 2021 capital plan, and we're going to be hosting our first event there in April.
Yes.
So we're going to do the renovation between January and April, or?
This becomes an exercise in really good project planning. So the engineering work, we still have some money in the master plan budget from this year. We will be using that money to get the engineering work, architectural work all ready to go. Contractors lined up. Starting January 2nd, we need to be in that building. So yes.
We can do the roof ahead of time, though.
And we're doing the roof ahead of time. So anything we can do, we're doing this year. But the key, Regis, is getting all the preparation work done in 2020. If we waited until 2021 to do that, we'll never make it.
So this will all be part of the business plan that you're going to prepare for that facility.
Absolutely. Yep.
Tim, anything else?
We have a few more questions.
Good.
Trish follows up with, why do we still have a developer board member when the developer is no longer involved?
I'll answer that because it's in our covenants. It was part of the transition in 2005, 2006. And it will remain so for that period of time. And by the way, Phil has been a very valuable addition, providing continuity, providing a different perspective, and getting one vote out of 6 or 7. So we can always overrule him.
Plus too, the developer continues to reserve the right. You know, the current plan with acreage that we have available for development, we have about 600 lots left. About 300 of those are really nice lots that could be built on easily, i.e. our 20 homes a year being built. But like we did at the Bluffs, where we acquired a property adjacent and we were able to add 60 home sites and develop the Bluffs with its own separate entrance for residents of the Bluffs. There are some additional properties available out there if the development company decided to go out and develop some adjacent farmland, or someone come along and paid a wonderful price for the opportunity to finish developing Big Canoe, we were approved for up to 4,500 homes in the original business plan. And with the amount of property, we could do that. So there is value to the developer being involved. And my role as a resident and someone that loves this community as much as all of you do, we want to do the best job we can and protect the developer's rights, particularly of the roundabout, the commercial properties adjacent that they have access to. But also, we want to continue to make sure it's the best community it can be for us.
All right, Bob Hornsby, lot 5128, relevant to nuisance lighting. We wish it was darker during nighttime hours of 10 to 7, so stargazing, meteor shower watching is more enjoyable. What is the lumen maximum in the AECS?
I think we're going to owe him an answer.
Yeah, off the top of my head, I really can't call that, but I know there is one.
We owe you an answer. We'll have to go figure that one out.
I can answer it partially because I had to go through this recently. It's different lumens for different lights. So now that you're thoroughly confused, there is a rule that lays it out specifically, but lampposts can have one thing, path lights can have something else. There is a rule that lays it out very clearly.
No uplighting, those kind of things.
Right.
Yeah.
What's the enforcement?
Well, probably sort of a inverted way of doing it. Someone complains and then you find out you're right or you're wrong.
Okay. So we don't
Well,
have the
also
light.
in addition, Trina also does at least a couple of times a year, we'll do a nighttime ride around the community looking for lighting violations as well.
All right, and the rules are linked at the bottom of every website page, so the answers are there for you if you're willing to do some reading. Our next question is Roger Hackler, 8107. Question for Scott. What is the plan for the marketing of Big Canoe? It's obvious that the developer is not doing any marketing. We believe marketing our community is very important.
I would agree wholeheartedly. We still do not have, and Phil can comment on this a little bit, we still do not have the right or responsibility of marketing homes and property. Big Canoe Realty has that responsibility. So that being said, we are very, very interested, especially with the chimneys and the renovation we're going to be doing to the chimneys and the money we're going to be spending to do that. We're very interested in filling up that facility with weddings, banquets, very small corporate meetings, you know, kind of like board of director type things like that, because obviously that brings us more revenue in and certainly helps with that food and beverage discussion we had before. So I spent most of yesterday with Bobby Jones Marketing. And one of the things we talked about were all the assets that need to be created. Right now we have a talented person named Mandy White in banquet and wedding sales. And she's doing a pretty awesome job with both hands tied behind her back, because there isn't a whole lot of assets that she has to work with. So she's kind of selling on the phone and saying, imagine if you will. So we're going to fix that for her, because I think then she can do a really, really awesome job. So that'll be one major focus that will be our major external focus. I really can't get into marketing, you know, homes and properties. That's
Scott, I'll address that. We
ahead.
do continue to have billboards throughout the Atlanta metro area. We're also doing advertising in magazines and builder magazines and other things to attract buyers to the market. We have over 60,000 names in our database of people that have registered with us through the 48 years that we've been the developer in Big Canoe. And we drip to those people from time to time and encourage them to come back, take a look. They are assigned to current agents within the office, and we do follow up with them. And we encourage them to come up and enjoy the Discovery Package, try out Big Canoe for a long weekend, and come and enjoy the amenities.
I would say, though, a big area of focus for me personally and Bobby Jones is internal marketing, which is helping property owners understand how to get answers to their questions without, believing everything they see on Facebook, because there's an awful lot of misinformation out there, but you can't really blame them because it's really hard to figure out how to get the real answer and where to find the truth. So we're going to be spending a fair amount of energy on improving our internal communications, our internal PR and marketing efforts. And that's part of the customer satisfaction survey. Again, I'll just do one more plug for that, because if we can get a baseline for how everybody feels about that today, and then we spend a lot of energy and time working on that over the next 6 months, when we come back and do the survey again in early 2021, we'll have a good basis for how successful we've been. So that's part of marketing too.
Hey, Scott, one other point on that is, it's actually a question, are some of the changes we have been talking about to our website, could that be considered in essence to a strengthening of our marketing initiatives, or one arm of those initiatives? A better website would be more appealing, and it would be more of a marketing tool.
It certainly can be. I mean, right now, again, Big Canoe Realty probably has the nicest assets. Most of you, I know I did. Part of the reason I bought a home here is I saw that beautiful Mark Green video about 4 seasons in Big Canoe. That's not on our website. That's not on the Big Canoe POA website. That's sitting over there on the developer's website. So, I think there's things that we can look at that certainly enhance the value of the Big Canoe POA website. Just number one, as a resident, to be even more proud of, and number two, as a resident, to make it more useful, and number three, you don't really know if you're out there trying to look at Big Canoe and somebody said, "Oh, go take a look at this." You don't really know the difference between the POA and the real estate office and all that kind of thing. So we need to dial up our website a little bit too. I agree.
Roger Hackler 8107, we are paying Bobby Jones Links $15,000 a month as a management fee. Is Bobby Jones Links making recommendations to the board to improve operations? What is the acceptance rate of the BJL recommendations?
So the first thing, I'll take that too. So the first thing is, it's not they and us. We are they. I am they. So, we are Bobby Jones employees working at Big Canoe. That's kind of the way I look at my life. So Regis Regis did the wonderful job with the contract. It was kind of like we were dating Bobby Jones for a long time. Then we signed the prenup agreement, which was signing the contract. And last Friday, as Bob said, we kind of had the wedding. So that was the meeting where we got everybody together, the board, myself, key people from Bobby Jones. And we rolled up our sleeves and said, what are all the main areas in Big Canoe that we all believe need some attention? And what we have agreed to with the management of Bobby Jones is a number of deep dives in key areas. And we're starting out with marketing. As I mentioned, I spent all day yesterday with their marketing folks. We're moving into HR and finance next week. And we're looking at what do they do? What do we do? What processes do they have? What processes do we have? What reporting and things and what systems do they have that we can take advantage of that are hopefully going to streamline our operations, also, reduce some of our costs as well. And as I also mentioned, we're doing a whole lot of training next week. So every single employee here is going to be going through a Bobby Jones service training process. So we're just kind of rolling up our sleeves and getting busy at this point in time. And nobody's forcing anything down anybody's throat. We're just one team, kind of seeing what's the best, most efficient, most cost-effective way that we can get some things done, because they do it every day with 21 other properties. And we're kind of unique because we're a city. But on the other hand, they've got a lot of things that can help out. So look for a lot more updates on that in the future.
Yeah, let me add, now that we signed the contract a while back, a couple weeks ago, we've got a new general manager, 10 days ago or so, 11 days.
Yeah.
So we were in an interim period for some period of time, where Gautam was the interim general manager. And probably the biggest recommendation that he made was relatively early on was a reorganization where we have a director of amenities and director of operations. And we accepted that gladly, and it seems to be working out very well. There's been a lot of little things going on, and we haven't had any major disagreements. It's to date, I don't expect that we will, because Bobby Jones Links says one of their biggest objectives is to make us successful. They see a great deal of opportunity here in Big Canoe, and they want to make that opportunity reality. And I think we're going to be working together very well, and seeking a lot of their recommendations, as they have seen 20 or more properties. We've been kind of insular with one property. So we're looking for that broader view.
I would like to clarify a couple of things that Scott said. Number one, about he is a Bobby Jones employee and all of our employees are Bobby Jones employees. Just to make perfectly clear, he was speaking figuratively as far as the employees are Bobby Jones employees. They are still on our payroll. The plan was to transfer them to Bobby Jones, but because of issues with workman's comp and insurance that are way too complicated and to go into now. But I just did want to clarify that point, that they are Big Canoe employees from the standpoint of their paychecks as Big Canoe on it, but they do take management direction from Scott. And Scott has a reporting relationship. He reports both to the board and to Bobby Jones. So it's not like Bobby Jones has completely, taken over the ship that is Big Canoe. The board, still has Scott is a direct report to the board, and he also has a reporting relationship with Bobby Jones. I just wanted to clarify that. So
yeah, thank you for clarifying like the nuts and bolts at kind of a psychological level. We're trying to get the employees, all of us, right, to think Bobby Jones is not a consultant. They're not somebody that we just brought in and paid a whole bunch of money to, and we can say, yeah, thanks for your opinions and bye-bye. The contract is a management contract. Bobby Jones Links is the management company for Big Canoe. So, that's why we're doing training of the employees. You'll see some co-branding on name tags in the future, things like that. So even though nuts and bolts wise, the money is, the paycheck is still, says Big Canoe in the corner. We're part of Bobby Jones Links, and that's a really big change, and it's really important. And they have tremendous resources and a tremendous record of service. And it's a big part of, I think, the change that we're trying to execute at Big Canoe. It's a good thing.
We got more questions, Tim?
We do. We have a final question for you.
Okay.
Mike Ziegler, lot 4079, asked about Gulfport Grading Company is dumping construction debris in our borrow pit at the north gate of Big Canoe. This debris is coming from home builds in Big Canoe, also from a construction site on Highway 53. Why are they dumping waste on our property?
Oh, that doesn't sound good.
I'll answer that one. We have an agreement with him to allow him to dump debris in exchange for removing debris from the borrow pit, such as ground up things that we take off the property, such as ground up asphalt, and those kinds of things. So there's a working relationship there amongst Public Works and Go Forth Grading.
Okay, that's it, Tim.
All right, thank you very much for your answers.
Thank you, property owners, for your involvement and your very good questions. We really appreciate it. Another thing I want to thank property owners for is one of the key drivers that we have this year is to clearly separate operational decisions from board decisions. And the property owners, I have noticed in the last couple of months, have become much more aware that Scott, the interim general manager, Gotam, is the driver on operational decisions, and the board has its responsibility to for oversight, for setting direction, those types of things. But we don't make those operational decisions. And the ones about COVID-19 have been made, the 4th of July, a myriad of them. I see things posted on Facebook that said, here's 7 issues. They're all operational issues. Don't ask the board. And appreciate property owners being aware and of that distinction and helping to make that distinction a reality. With that, is there anything else before we adjourn? I think we're done. Thanks everybody for your contribution. Appreciate it. We'll see you shortly.
Thank you.
Night, everybody.
Bye-bye.